What's up, guys? Good evening. How are we all doing? Can I confirm that you guys can hear me? If you can hear me, just so you can hear me. If you can hear me, just so you can hear me in the chat section, guys. Any noise? Any echo? Okay, guys, if you're on the call, if you're on the live stream right now, just do me a favor, share this link to your friend that you know that is a trader. The thrill of going live together and trading live together. So just share the link to a friend of yours. Send this to your friend group of traders, everybody, anybody. Come one, come all. Okay, guys, so today is FOMC. I was waiting for others to join. So today is FOMC, and we are live. And as always, this is the first time you're going live with me. I have three rules to it into another different account that you want to trade with. Thirdly, is we learn on every live call. There are always new things that you need to learn on the live call, and those are some of the most important things that that we need to get fundamentals are supposed to be. So whenever you're on live with me, be rest assured that you're going to be learning what it is. My voice is echoing. Okay, give me a moment. Let me see. Oh, okay, is my voice still echoing now? Is my voice still echoing? Okay, it's better now. Okay, all right then. Okay, so yeah, back to what we're saying. So we first need to understand what FOMC is and what the interest rate decision is all about. And in order for us to understand what the interest rate decision is all about, it simply means that we have to go through a brief rundown of exactly why the interest rate decision is important, first of all, to the Federal Reserve, and secondly, to the government. So, in order for us to also understand why interest rate decision is important, we also need to get to understand why. Sorry, let me turn on my charts. Okay, so let me turn on my charts quickly. If you're still on here and you've not shared this link, share the stream link to your friends. Share the stream link to your friends, guys, so that they can all join too as well. Okay, my chart is coming up. Okay. Can we see my screen now? Are we seeing my screen? Okay, good. So let's quickly go to forexfactory.com. Okay. Yep. So we have fund. We have federal funds rate by. We have federal funds rate by 7 p.m. Federal funds rate by 7 p.m. And the reason why we have federal funds rate first is we need to understand if there was a decision made. Now there's something most people don't know. Sometimes you see FOMC statement, sometimes you see FOMC meeting, sometimes you see FOMC decision. Now during the FOMC meeting is basically where they sit and make decisions on if there's a need for them to increase interest rate or not, but nothing really significant happens during those periods. Now the federal funds rate basically is interest rate decision. So probably on your what do you call it, on your, instead of my forex factory, maybe FX street, what you'd get is my, what you get is interest rate decision. And if you get interest rate decision, it means the same thing. Now why is interest rate very important? Interest rate dictates, or rather sets the tone for borrowing, spending, investing in a country. So if the interest rate is low enough, it means people can borrow more money. If the interest rate is high enough, risky investors can make more money. Investors who are actively looking for better returns and to make more profit. Now, which of them is good and which of them is bad? Now, the Federal Reserve banks use interest rate decision to try and control the economy. Now, if an economy is sliding, meaning that the economy on its own is not doing so well, there are more chances for you to see that the federal bank or the Federal Reserve would most likely hike interest rate. Why it's hiking interest rate is because the economy at its own pace cannot account or cannot fund itself. So there's a need for external money. So now the reason why it is increasing its interest rate is so that it can entice more investors. So put it this way, if you're an investor and you wanted to invest in a business, would you invest in a business that is offering you 1.25% return, or would you invest in a business offering you 3.5% return? So similarly, it is the same financial logic. The country on its own can fund and fend for itself, meaning that it is being able to cover up debts. There are more investments and everything in the country, and there are more jobs. Inflation is low. And why inflation is important is because of this. If there is less inflation, it means that the common man is doing better and can survive the rate of things, can pay for the cost of things, there are more jobs and everything is working and possible. Ooh. Ice. So back to what we're saying. So because of that, there's a need for them to either hike rates or cut rates. Now, another thing that can make the central bank increase rates or cut rates is because of like inflation. Okay, if my video is lagging, so what we're going to do is we're going to take away. Okay, if my video is lagging, okay, let's focus on the screen for now. I'll put my video back on. Okay, so uh next thing we also want to understand is there are different types of inflation, and different types of inflation would also be a reason as to why there's a need to hike interest rates. So let's take for instance, if there is a monetary inflation in a country. A monetary inflation now is the excessive inflow, or is the excessive distribution or excessive circulation of money in an economy. Now, the more money there is in an economy, the more less value it carries. Now, in order um, for that kind of inflation, most times what the Federal Reserve Bank would do would be to hike interest rate. Now, why it's really hiking interest rate is because one, it wants to encourage more investment. So instead of people just spending their money anyhow, it wants to encourage them to invest. Secondly, it also looking to stop people from borrowing money, because if there's too much money in circulation, there's no need borrowing money out again. There's already too much money in circulation, so why are you borrowing money? Instead, you're looking to bring back all the money in circulation back to the bank. So you're going to increase interest rate, and increasing interest rate therefore means that what, people would want to invest more. But when you cut interest rate, it means that people would tend to borrow more money than they would save more money. Now, there is another type of inflation that might make them cut interest rate. Now, they're not cutting interest rate because of the general public, but they are cutting interest rate because of producers. So let's take for instance, if companies have less money to actually operate and run their businesses, it means that there would be lesser jobs for people. Now, take for instance the whole tariff problems and why Trump is really clamoring for an interest rate cut is because he's looking for companies to start operating. He's looking for factories and manufacturing companies to start operating in the US again. Now, in order for them to be able to operate in the US, they're obviously going to need a cost for production, and it means that they would necessarily need to borrow money. Companies don't use all their money to run their businesses. They always borrow. Even billionaires, some of the money, if a company for instance is evaluated and says they are worth 1 trillion, they don't have 1 trillion in cash, so they would need to still go back and borrow money. So what they use is they use their valuation to loan money from the bank and use it to operate businesses, and then return the money back to the bank, make their profits off of it, and that's how it works. So now, if these companies are going to run as they should, there would be a need for them to borrow money. Now, there's nobody that is going to want to come and borrow money at 4.50 or 4.75 interest rate. It's obviously going to look for less. So at the end of the day, Trump is looking to see how the interest rate can go back all the way to, like, that would propagate factories, companies, and everybody to actually start setting up at a cheaper cost and borrow more money to run the cost for their business. So that is like the key thing. That's like the major reason why you see Trump has been shooting Powell in the leg, and saying he probably knows how to do his job more than him, and all of those things. So it is because um it is because of that same notion. He needs
the interest rates to be cheap as possible so that people can borrow more money and run more businesses. Okay, and another reason why Trump is saying what he's saying is that if he sees the inflation numbers fall below, okay, if he sees inflation number fall below 3%, that he would consider cutting rates. Now, cutting rates is important too as well, because if you cut rates, you're going to help companies create even more jobs because they can borrow more money and all of those things. But at the same time, Powell is looking at the present tariff concerns. If the tariff concerns are going to go high, if the tariff concerns are going to go high, it then simply means that the cost of things are going to be expensive, and that is going to in one way or another skyrocket the prices of goods and services, and that's going to lead to inflation at the same time. Okay, so that's why you see that Trump is concerned, and Powell is concerned, not just about not just about just cutting interest rate, but he wants to see, okay, so what's your plan with this whole tariff issue? Are you going to find a way to sort it? Because if you don't sort it, America is America is an importing nation, and if we start importing things, you're going to make it harder for people to actually buy these things with your whole tariff plan. And that's like the number one thing that people want to see at every point in time. They want to see charts. Okay, so let's look at gold for FOMC, for interest rate. Now, two things are going to happen. Okay, and let's talk about the outcome when it comes to interest rate. Okay, when it comes to interest rate, there are usually three outcomes. Okay, it's either the rates are being cut, and a cut rate, this is what is important. We also want to learn that the economy dictates the strength of the currency overall. It's not the news that dictates the strength of the currency. Sorry, guys. I'm having a bit of a dry throat today. Okay? The economy dictates, I'll say this thing again. The economy dictates the strength of the currency. The currency does. Traders run into the report of a high impact news because it affects the currency almost immediately and rapidly, and that is because people who are CFD traders are high risk to buy and sell. Either we want to buy or we want to sell. So once we see the news, everybody's running into the market, there's a panic. But at the end of the day, the first question you really need to ask yourself is, what just happened? Is it good for the economy or is it bad for the economy? So far so good. What has been the series of things progressively that has led to that very event? So let's take for instance inflation numbers. Inflation numbers on the charts, if inflation is high, numbers are high, the Feds will have no other option than to hike interest rates so that they can meet up. Do you understand? Risky investors are people who are looking for high interest rates, short-term investment, 1 month, 2 months. They can put in like maybe people like hedge funds, multinational companies. Those are high-risk investors. So when they see that inflation is high, they take advantage of the increase in interest rate that is possible during an interest rate decision. So that is automatically going to push the dollar short-term. It's going to make it go bullish, because that is what is expected. But now, in actual sense, a high inflation number isn't healthy for any economy. It means that its people are suffering, prices of things are expensive, and the job, the current state of its labor force cannot meet up to the prices of goods. Just exactly what is happening in Nigeria, for instance. You can see that there are lesser jobs, but the prices of goods keeps increasing. We have people driving cars to work that are not earning up to 500,000 a month. Full tank for some people's car right now is anywhere between 45,000. Toyota Camry V6 or a Honda V6 or anything. You're buying more fuel because you're using a 6-plug engine. Now, if you're earning less than 500,000 during this period, what happens? There's no parity to it. Cost of goods is increasing, and then your earning is low. So you see that the inflation is radical. It doesn't make sense. So it is bad for the economy. And at the end of the day, whatever happens in the economy, the currency is going to receive its ripple effect. So before you jump and see a news and say, oh, it's good for currency, first ask yourself, is it really good for the economy? Is it something that the government or the economy has been patiently waiting for? Those are some of the things that you need to consider. So looking at gold now, we saw gold make an all-time high. Okay, we saw gold make an all-time high at 3,500 and started to sell off aggressively at 3,500. Lots of buyers got trapped within this range here. Okay, lots of buyers got trapped within this range. Now this range is what I'm referring to as an accumulation phase. Okay, just right after that accumulation, we had this manipulation here to the downside, and then prices expanded aggressively to the upside. Now there's also something that we should note. Prices has a key support level here at 3,150. Okay, we have a key support level here at 3,150. That price repricing. Okay, so let's look at the Fibonacci from here to here. We roughly stopped at 50%. A good repricing for me is usually anywhere around 61.8% or lesser. So I usually want to find a valid order block or demand area or key level around my 61.8 and 78.6 levels. These are the two levels that I always look for prices to reprice to properly before any expansion move, any long-term expansion move. So we have 3152 area, and then we also have this other block here that was, and this was here before the break, and then now we also have this level here. Now mind you, I just made mention of something that you should pay attention to. We had an accumulation, we had a manipulation here to the downside, and we saw prices do what? Create that shift and expanded to the upside. Okay, I pay attention to candlesticks too a lot. What can you see on the candlestick here? The first thing I want you to notice on the candlestick is what? If you're not a new trader, and if you're a new trader, the first thing you notice here is we finally hit a resistance point. We had this huge rejection to the downside. So I always pay attention to candlesticks. If you're a new trader on the call and you've not read, 100 was not only just a key level for prices to get to, but it was a sentimental hallmark. What do I mean by a sentimental hallmark? It was a place that every trader, every fundamental trader, every investor, banks, and everybody were anticipating 3,500. What happened after that huge sell-off? We had a confirmation sell candle follow it. So right now at this point, what we have here is something referred to as what? As an evening star, which is a bearish reversal candlestick pattern. Now, in order for us to too low. Okay, just a moment. Let me see why my voice is too low. Guys, can you hear me now? Am I loud? Let me just get it loud and clear in the chat section. Guys, if you're on this call and you're not subscribed to my YouTube channel this far, please do hit the subscribe button. Let's get to 1,000. Thank you, guys. Okay, I hope we can hear me loud and clear now. In the chat section if you can hear me, guys, so that I can keep going on with the gold analysis. Just type loud and clear. Okay, loud and clear, loud and clear. Can I get it loud and clear in the chat section? Can someone say loud and clear for me? Okay, so I'm going to assume that we can all hear me.
I'm going to assume that we can all hear me. So yeah, so back to what I was saying. So we can see this push to the upside. Now, this push to the upside that happened on the weekly time frame for me is a test on resistance. Why do I call it a test on resistance? I don't just use one. Before, you notice that before the sales happened, we saw prices test these levels. We saw prices test these levels. We saw prices test these levels first. We saw prices test 344 first, and then before it then went to 3,500. So it means that prices had come here severally before on a smaller time frame. So there's a resistance point here. Now this is candlestick. It means that what this accumulation here was a very good trap to sweep out people that were trying to buy severally. Sellers came into the market, and now they've also taken the sellers at the top of this point. When we go to our 1 hourly time frame, what do we see on the 1 hourly time frame? So on my 1 hour on my 1 hour time frame, I noticed that what there's structure that was left on the smaller time frame. This is like a 15-minute structure here before we eliminated that 15-minute structure and went bearish, and this was exactly where we eliminated that 15-minute structure, just at this point. And just from that point, another thing that I also noticed is what we have a true supply zone that was not mitigated, just exactly here. We have a true supply zone at 3456. Now, why did I call this place the true supply at 3456? Now, the reason why I'm calling that place the true supply at 3456 is because when you look at it at 3456 here, when you prices hit 3,500, sellers came into the market, buyers tried to push and failed. 1, 2, 3. It was after this point that the displacement happened. This displacement was responsible for what? For creating this 500 and 34500 are the one true supply area. So we have interest rate coming out in 6 minutes, guys. Usually before that, we are most likely to see something. Okay, we're most likely to see a liquidity being kept. We have this point here being kept. So what I'm looking for now is retail reaction. I want to see people react and pump this price to the upside before we then know where the actual move of the market is going to happen from. So let's go back to Forex Factory. So we have 5 minutes left on the clock. So let's see what the interest rate is going to be, if we are going to get an interest rate cut or are going to get an interest rate hike. Okay. We're supposed to have a guest on this live stream. Okay. So there's also another thing. There's also something else that I want to tell us is some of the things that are also going to be responsible for this interest rate decision is the GDP, okay, and employment. So in first quarter, we saw the economy contract to 0.3%, while April saw an addition of, just last month we saw an addition of 177,000 jobs, meaning it's kind of good, but at the same time it's shaky. There's no full balance to stating if the economy is completely doing well or not. It just seems to have like a very neutral balance. Now, two things are going to happen, honestly. I'm not expecting an interest rate hike because inflation is not crazy, but GDP is low,
jobs are not as sploofic as we would expect them to be, but most importantly, what we are seeing is, okay, jobs are being added, but it's not really changing the unemployment rate. Unemployment numbers or statistics isn't going lower, but jobs are increasing, which is good. But GDP is not also doing well as well, because of the whole tariff thing. Balance of trade is poor and everything. So that's another thing to also factor in, to see if Powell might actually keep this interest rate at 4.50 again. But if he does cut this interest rate right now, we're 2 minutes away. If Powell says he's cutting interest rate by just 0.25 base point, the market is going to go crazy. And what you're going to see is, you're going to see a quick reaction on the currency. You're going to see the XY dump, and then you're also going to see gold fly. So we're going to get a very solid, strong reaction on gold to the upside. So let's quickly look at the XY and see. Okay, let me just show us let me show us the XY quickly. Okay, let's look at the XY. For me, I'm on the bullish side for the XY. The XY is loading. What's wrong with this chart? Okay, so I've had this analysis on the XY for a while. Okay, so we have this this heads and shoulder level still holding. If interest rate decision is kept normal, like if it's still on 4.5, then whatever Powell says is going to be what is going to be responsible for moving the market. If Powell doesn't say anything to move the market is just going to be stagnant. But if we get that interest rate cut, then the market is going to react. If we get that interest rate cut, the market is going to react massively. So this is my view on the XY. So in the long run, you can also keep this analysis. Okay, I want to see the XY break. Okay, I want to see the XY break. In fact, it did break the first heads and shoulder neckline here, but then below here, then went up and then pulled back down. So I want to still see that break of this level here, and then I want to see the XY back at 102. I want to see the XY back at 102. I want to see this place here covered up at 102. Then we might get any continuation of sales. But if Trump finally makes his tariff plans clear and everything goes as planned, we might see the dollar rebound from this level here. We might see the dollar rebound from 197. It's pending. Okay, so interest rates still the same. Powell didn't cut rates. Let's see how gold is reacting at the moment. Let's see how gold is reacting at the moment. You see, no effect. Interest rate is normal, 4.5. So no reaction. Nobody's reacting to the news yet. So now we have to sit and then wait for what Powell is going to say. So now we're waiting to hear what Powell has to say. Didn't cut rates or why he left rates normal. Okay, let's analyze this. So we have this low here. Okay, so we are stuck in this range. We're stuck in this range. So this low to this high. Okay, this low to this high exactly. So we want to see where the market is going to drive at. If we get a full break, during his speech over this point here, and to hear where he speaks, and prices should drop. We have this huge fair value here, so we'll most likely be looking for buys from this point again, because like I said, the true supply is above here. This is where the true supply is at before any sell. So if we should sell off first of all,
then we'd have to continue the buys till we get here, and then expect that price action continues the natural trend. And turn on the bell for post notifications so you get notified when new videos are up or when next I'm going live. I've seen a lot of comments in the chat saying that they and see what the problem is. Okay, so see how this may the good Lord really help them in this period. Okay, so now the next thing we're going to be looking for is saying what exactly is Powell talking about, and let's see when is Powell going to be speaking. Powell is going to be speaking by 7 already. Okay, then we have his statement. I think he has started giving his statement already. Let me open my CNBC app. That is like the most reliable around me, and if it's this bad, then you already know. You already know that this is Nigeria. So let's wait for Powell's. Let's wait for Powell.
Where we were a number of months ago, but a lot has changed, which is why this line pops up in the statement. If you're just joining us, no change to policy expected, but some new language here that can
become the greatest funded trader of all time. Get payout on demand, no time limit, up to 95% profit.
Mike, as you know, this afternoon
We are waiting for Powell's statement.
Now that it's in the statement that Jay Powell will stand behind it, and of course it's what he said in Chicago. Now the question is, how is the president going to react to this? Because he was upset about the Chicago version of this that came right after Liberation Day. But the Fed otherwise doesn't mention the administration or the White House except to say that imports affected GDP. So is this a poke at the White House, or is this just accepting reality and trying to get the markets to accept it?
Mike McKee with the latest. Mike, I know you've got to run. Mike McKee heading into that news conference. The news conference, by the way, starts in about 23 minutes' time. Bob, your view on what I imagine this president is annoyed by that. They look at the same policy shock but see a different outcome. Abroad, they believe this is a disinflationary, potentially deflationary shock for Europe. What kind of shock is it for this Federal Reserve?
So everybody is cutting rate, only Powell isn't cutting rate. And like I said, Powell isn't going to cut rates just because Trump wants rates to be cut. Powell is going to cut rates when he thinks the economy is good enough and stable enough for a rate cut. Because at the end of the day, it is